Okay, good afternoon, folks. Good afternoon, one and all. Just a quick sound check. Make sure we're coming through okay. Make sure you can hear me. Let's have a look who we've got in the house today. If you are listening in and you're sitting there on the sides, just auditing me, can I ask you just to say hi so I know that I'm listening or people can hear me, and let me know where you are in the world. We get a lot of entries for the trivia. There's only about 10 of you that actually talk, where we get 50 or so entering the competition every week. So let me know that you can hear me now. Let me know that you're listening in. If I don't get the feedback and I don't get the interaction, then I maybe won't bother doing it anymore. So let me know if you're listening in and where you are from. It's an interactive session. It's not just me giving away. Sophia's there. Hello. I think I know where you are. Sophie, yeah. Nelson is there. You, Glesh, as well. We've got Ray Dalio. Same old faces every time. Appreciate you turning back. Kanush, yes. Hello to you. Simea Hill is there as well. You can hear me loud and clear. Well, welcome, if indeed. Oh, Peter. Peter from London. I was due to have a one-on-one with you yesterday, and I was waiting here for about 15 minutes last night, waiting for the one-on-one. I think it was you, but no show. So I've sent you another email. You can book another appointment with me, should you wish to. But I was there waiting. Right, you got Simihil is in from Russia. We've got I don't know how to pronounce that name. Unfortunately, can't speak that language. But hello to you. Good to see you here. And we've also got Fabiano. Good afternoon. Were you on the Google link, Peter? Were you on the Google link that I sent? Okay, so if you are new to these streams, welcome. Good to have you here. We do the Monday stream, as you know, well, you might not know, every Monday, talking about the week ahead, and we have a Guess the Gold competition. We also try to get on once in the midweek for a key economic release, where we do a trivia. Well, I do them at the moment. I won't say I'll do them forever. But we do a trivia. Well, we're doing a trivia today anyway. We'll see how it goes going forward. To give away a $12,500 assessment account on 3 simple questions on a key economic release that we're having out in the week. Now, this week, I chose to do the European Central Bank as a big... sorry, Peter, if you can check your email, when you got the confirmation of the appointment, there would have been a Google Meet underneath it. Check your spam there, because it goes out to everyone that does these. So something may be going on down your end. I did check to say that we did send it to you. So this week I picked the European Central Bank, but it's just basically in tune, or in line, I should say. Well, not in line, that's the wrong word. It's basically going to coincide with the announcement at the bottom of the hour, which is...
Good morning, it's September 11th, 2025. Here, the morning juice for the US session.
That's my
dollar
squawk.
inched up ahead of CPI, which is...
that's my squawk just bellowing out, so let me turn it off for a second.
So
it coincides with the CPI, which is at the bottom of the hour. Now, the CPI is a consumer price index out in the US. It's most probably more significant than the ECB, but we can talk about that in a few short minutes. What I need to do now is basically talk about the ECB, because obviously that's where the competition is going to be, or the trivia is going to be centered around. I'm basically going to ask 3 simple questions. Those that get all 3 answers correct will go into a random selection process, which is done behind the scenes here. And my team basically select a random winner from the winner. Just because you won it last month or last week doesn't mean you can't win it this week. It's completely random. So I encourage you all to get involved. If no one gets all 3 answers, then we'll go down to 2 answers and so forth. But there you have it. Now, of course, you can use any source to get your information, whether you want to use ChatGPT or whether you just want to listen to me, which I think is normally quite good. The reason why I do this is to basically, hopefully, sort of share a bit of education with you. And that basically means, I'm going to be talking about the economic releases, what they mean and so forth. Hopefully you learn something. But if you're paying attention, that's the one way of learning. That's why I do the little trivia thing. So I'm going to give out the information maybe in the next 5-10 minutes or so before I release the questions. And I'll release the questions and the Google Doc where you can answer the questions. So there we have it. Yeah, ECB is going to be out in about about 7 minutes for the ECB. The ECB, it's the interest rates basically. Well, there's 3 interest rates really in the that they release. We're expecting rates to be unchanged at 2.15%. That means they're going to be holding rates unchanged again, although there's a slight possibility that they will move interest rates. They've actually, they've moved interest rates, I think it's 7 or 8 times now, I think, since the beginning of their rate cutting cycle, totaling sort of 2%. So they are now going to maybe keep these rates unchanged, which would basically mean that it will be, well, it's basically all going to be down to the forward guidance, the follow-on statement from President Lagarde, who will basically give her outlook on where it's going in the future. Of course, if interest rates are rising in the Eurozone, well, that's obviously good for the euro and it's bad for the dollar. If the Fed are cutting interest rates, then obviously that's bad for the dollar and good for the euro. In effect, it doesn't always work like that, but that's in theory what should happen. And of course, everyone's talking at the moment about the Fed cutting their interest rates, aren't they? So if the ECB hold their interest rates unchanged and the Fed cut interest rates, well, then you'd expect to see the euro trade higher against the dollar, and vice versa if indeed it goes the other way. If the ECB cut and the Fed rise, will keep the rates unchanged, then of course it will go the other way. Now, the reason why I think this is important, I'll tell you my view on what will happen. I personally think the Fed are, well, they're pretty much going to price in, they're pretty much pricing in a cut next week on the 17th of September. And I think the forward on statement here in the euro is more likely to be the significant move. If she becomes more sort of dovish, that basically means that's a downward pressure on interest rates. If she becomes dovish, then, and she might become dovish for a number of reasons, obviously Trump tariffs and the effects on the European economy. If she turns dovish, then that's going to affect the euro to the downside. The CPI at the bottom of the hour is important for the euro, important for the dollar, because if interest rates are going to move next week, well, the forward guidance, of course, is important there. Will the next cut in interest rates be at the next meeting and the next meeting? Are we going to have 2 cuts or 3 cuts this year? And CPI could be a leading indicator for that. All right, just over that, we've got about 5 minutes now before the ECB. I say it's pretty much unchanged as expected. It's going to be pretty much unchanged as expected, but listen to the forward on statement. Once we get that out of the way, I'll talk more about the CPI. But in the meantime, let me just get some of these questions before the ECB make their announcement, and then I'll drop the form in. Remember, all this is meant for education and entertainment. Do not trade on the back of what I say. That is not trading. That's basically gambling. You need to make your own informed decisions, follow your own strategies, or indeed follow some of our strategies, my strategies, if you so wish. But just trading on the back of what I say is not going to make you money in the long run. You might get one trade that makes money. You might get one trade that loses money. Trading is about the big sample of trades, the big, not sample, but the big sort of law of large numbers, the trades that you do over the course of the year, not just on one stream. Okay, so now we're all grown up. We've all established that is just meant for education. Let's get into the questions. What is the marginal lending facility at this moment? Might all change in 4 minutes time, but it's now. What is the marginal lending facility rate in the European Central Bank? That is question 1. Write it down on a bit of paper. I'll drop the form in a moment. It doesn't matter. It's not fastest fingers first, so it doesn't really matter when you get it in. I'll make the draw at the bottom of the hour or just at the end of the stream. Okay, question 2. How many rate cuts has the ECB done since the peak in 2024? Okay, obviously with the runaway inflation caused by numerous global events, wars and so forth, inflation prices have been rocketing higher. all interest rates around the globe were going higher. The Eurozone, the US, and everyone was going higher. And then they started cutting about just over a year ago now. How many cuts have they had since they started cutting? And the last question, if the Fed cut rates and the ECB were to raise rates, which direction should the Euro USD go? Okay, that should. No idea which way it's going to go, and no idea what the central banks are going to do. But I'm just talking about in general terms, what would be the bias for the euro against the US dollar if the Fed cut rates and the ECB were to raise rates? What would happen to the euro? Right, I'll just drop in the form now, and then you can get your answers in. Hopefully this is the form that is going to work. And boom, away you go. Good, Nelson. I'm pleased you love hearing me speak. Absolutely. Great. Stephen Byron, hello to you. Good to see you in the house. Hello, FTP and everyone. Thank you for saying hi. When someone wins the giveaway, why don't you take the email from him directly here in the chat and get his account via email? No, because I want to because you do it my way. My way is you enter a form, and I don't know all the entrants here in the email, and I don't want to share one person's email with the whole world for obvious reasons. That would be madness to do that. So there you have it. Well, I'm just going to turn my squawk on. As I say, I'm not expecting anything to happen in this. It's going to be in literally a minute's time for the ECB to announce that they're leaving rates unchanged. We'll have a quick Daisy. We'll have a quick look at the charts. This is the euro against the dollar. Let's just go down here to the
1 minute ago. I will read with the ECB deposit rate.
Okay, so here we go. This is where the euro is likely to be. My personal opinion is that we are going to see the euro coming under pressure. The US dollar, although we're seeing inflation at the bottom of the hour, I'm thinking that inflation is going to come in line. It's not going to be a massive move to the downside. I think this is going to come under pressure. Certainly, if everything is expected to come out the way analysts are expecting, and that's basically unchanged. Unchanged in rates coming, unchanged in rates, but maybe a bit of a dovish tone. Maybe thinking about, inflation's under control, and they will think about cuts further down the line.
10 seconds.
Okay, so we've got about 10 seconds for this announcement. Your squawk that you're hearing from me is going to be about 10 seconds delayed, of course. But I can probably...
No change. Rate remains unchanged at 2% as expected. Interest rate, no change. Rate remains unchanged at 2.15% as expected.
Yeah.
So deposit rate unchanged at 2%.
Deposit rate unchanged at 2%.
So ECB says inflation is currently around 2% medium-term target, and the ECB's assessment of inflation outlook is broadly unchanged.
So yes, all unchanged. Outlook's unchanged.
ECB staff projections present a picture of inflation similar to that projected in June. ECB saying to keep the 3 ECB interest rates unchanged.
Okay, so there's 3 interest rates that have been
determined to ensure that inflation stabilizes at its 2% target in the medium term. They're not pre-committing to a particular rate path.
So no real change in the statement from last month.
For inflation excluding energy and food, they expect an average of 2.4% in 2025.
If anything, I think this has got a little bit of an upward pressure on interest rates, although the euro is not liking it. Euro now is taking a bearish look on this, 10 pips to the downside.
Based on its assessment of inflation outlook and the risks surrounding it, in light of incoming economic financial data, as well as dynamics of underlying inflation and strength.
I don't think you guys can actually hear the squawk coming out for me, can you?
ECB says APP and pandemic emergency program and portfolios are declining at a measured and predictable pace.
Okay, yeah. So no real
principal payments from maturing securities.
And no real change in that. I mean, the euro is coming under a bit of pressure. I thought that just based. I haven't traded it, but I thought that on just the basis of what we've seen in recent meetings, and the
ECB
fact
sees
that
2025 inflation at 2.1%. Prior forecast was 2%. 2026 at 1%.
I mean, this is slightly interesting. This text that's coming out is actually a bit hawkish. We're actually seeing an uptick in inflation, an uptick into the next quarter. An uptick basically means they're unlikely to cut interest rates, sooner rather than later. That basically means if interest rates stay high, the euro should be supported. Although the euro is not liking it at the moment, so I don't think. Let me see if the link is not working. I think the link is working. Let me just check. The link is working. It doesn't work for you, but it's working because everyone else is entering their answers at the moment. Yep, the link is working. I think you said that last week as well, that link isn't working. I think you've got something wrong with your end. That's what we call in this, what we call user error, Simmerhill. What is the link meant for? You've got to listen up to the stream, and then you'll all be answered. If you're listening, if you hear what I'm speaking about, then you might have a clue on what the link is about. Right, so I would be surprised to see this. Well, to be honest, I think the CPI, which is going to come out at the bottom of the hour, and we'll luckily be streaming that, I think that's going to be more important. Let's just talk about the CPI. CPI, Consumer Price Index, it's expected to come in around 3%, but it's also expected for the Fed to cut interest rates next month. But they've already indicated that the futures market is already pricing in another cut before now and the end of the year. Here's what I think is likely to happen. Only a really low CPI print will really drive the dollar lower. I think it's more inclined to come in with a inline CPI print around 2.9%, 2.9% to 3%. If CPI comes in line, then you can expect to see the euro trade lower. You'll see the euro trade lower because the dollar is going to be more supportive. It's only a big shock to the downside in inflation will you see then the markets all start calling for a bumper cut. I think they're calling it. A bumper cut basically means they're not going to have a 25 basis point cut. They're going to go for a 50 basis point cut. If they go for a 50 basis point cut next week on the 17th, which again, I'll be streaming live at 7 p.m. London time next week. Yep. If they go for a bumper cut, then you can likely to see the euro dollar shoot higher because the dollar will trade lower, which basically means the euro will trade higher, maybe come back up into the 118 level. There's only a real low print in CPI today. Would you see, I think, this trend, which is really being down now for, down from basically that roadblock resistance that you've seen there at one. I put that roadblock resistance in, didn't I? I put that in a few weeks ago. It's holding at the moment. It was also part of the blog that I wrote. But yeah, I think the let's have a look here at the daily. I have to move my camera because it's blocking my screens off. So there you are. So the euro at the moment on the 4-hour chart, we put in this attempt at roadblock resistance. It's failed to take it up. Had this pullback and failed to take out the previous high. This is actually a boomerang reversal there. If you're trading the 4-hour reversal of that, pulls back, failed high. That's your reversal level. Your stops are going to be back down above the failed swing high. So your levels are going to be something like that. Failed swing high, profit targets next, support zone, which I think you can take down to 116, get about 2 to 1, or certainly get 1.5 to 1, maybe get 2 to 1 on that trade. And I think the data that we see today will only support this. I think you'll see, the dollar supported. I don't think the number is going to be low. The Fed, as we know, have got a bit of an issue going on with the employment data, which is coming in softer and softer every month, showing a slowdown in the economy. But the inflation is remaining stubbornly high. PCE a couple of weeks ago came in at 2.9%. Inflation is expected to come in around 2.9%. CPI today, I think that's right. Just have a quick update on the numbers. What's expected? Let's have a look. we are expecting to see inflation today come in at 2.9%. Last month it was 2.7%. Okay, so 2.7% PPI yesterday. Actually, I mean, PPI came in, if you watched yesterday, quite a lot lower than expected. They were expecting producer prices to come in at up 0.3. It actually came in at down 0.1%. So big sort of movement in prices to the downside, which is one of the reasons why I think the CPI could come in line. They normally lag. They normally lag a couple of months, the PPI and the CPI. Obviously, because it takes a couple of months for the producers to pass on those prices. So I don't think it's going to affect today's numbers pretty much. The fact that it came in softer than expected yesterday. Let's have a quick look at the answers to see if we've got any correct answers. Well, I've got. Okay, a lot of people are just using ChatGPT. I can see that, and almost saying it word for word. So chat is not being very imaginative, but I actually asked for a number, and if you've got the number correct, if you've got the question 2 correct, but we're still keeping it open until the bottom of the hour. 1, 2, yeah, there's a few people with the numbers correct, with all 3 numbers, all 3. So we'll look at that before we end the stream. But we've got about 4 all correct winners at the moment. Yeah, 4 all correct winners at the moment. So that's good. Anyway, so we'll do that random raffle at the, well, let's say at the bottom of the hour after the CPI comes in, which will be in about 6 minutes time. What do I think about gold? You know, gold. Andrew's guess 3.625, which we did on Monday. What's gold trading at the moment? 3.63625. Wow, that's Andrew's guess for Monday. It's not over yet. Still got a day and a half. Don't think we're going to end up at 3.3625 by Friday, but my guess is looking pretty good at the moment. Pretty bang on, I would say, at the moment. What I'll tell you in gold is...
5 minutes time now, at the bottom of the hour, we see the release of the US CPI numbers for the month of August. Year over year, forecast 2.9% on the prior 2.7%, with a range of 3 to 2.7% expected.
3 to
CPI month over month, forecast 0.3% from the prior 0.2%, range of 0.5 to 0.1% expected.
I'll tell you now, if inflation comes in, that guy's just said over my squawk. I'm not sure if you were able to hear that. But if it comes in as expected, actually, can you hear the man squawking, my squawk? Someone tell me if you can hear my squawk. Your guess was similar, 3.365. Okay. How many total winners? I haven't counted them up yet, Nelson. I'll count them up later. Well, so there you are. So the squawk was saying that the low is 2.7%. If we come in at 2.7% year-on-year inflation, okay, I would expect to see the dollar drop pretty quickly today, because even if we don't have because this is the conundrum they've had. I told you, the dual mandate: get inflation to 2% and maximize employment. Employment's looking a little bit shaky, heading up. Inflation's been stubbornly high. If inflation comes in lower than expected, as that man said, at 2.7%, then you're going to see the euro dollar fly higher. You'll see the euro dollar fly higher, and you'll mostly see gold trade back up, back up through those highs, 3.66 or so. if it comes in at 2.7% at the bottom of the hour, 3 minutes time. Don't think it's going to happen. Just on a technical level, okay, all-time highs. This is a potential break of structure now. Again, if you're trading my boomerang reversal strategy, which is fully documented in our PropIQ masterclass, that is your trade right there. So you're selling at this break of this structure because this swing low failed. Remember, an uptrend is made of higher highs and higher lows. When that changes, then a potential change or reversal in price is likely. A higher low should lead in an uptrend to a higher high. That's why it's an uptrend, higher highs and higher lows. Yeah, a higher low should lead to a higher high. If this higher low, if this higher low doesn't lead to a higher high, that means this is a weak higher low. If it breaks, trend reversal is quite possible. A trend reversal, taking that, would have your stops above the failed swing high, the high that didn't lead to a new high, and your profit target would be back down at another level of liquidity. And I would say the whole of this move really started at around that zone, but even more sort of more powerfully, I would say down there. I mean, you can always get a 4-to-1 on there. You're not going to do this on a day, but if you're a swing trader and you're trading a longer term charts, then this is most probably not a bad setup. I don't actually agree with it fundamentally, but I don't trade the fundamentals on my trading accounts. I trade fundamentals on my sort of pension accounts and my investment accounts. I look at the bigger picture from there. I don't really look at technicals in those at all, to be honest. I'm more sort of fundamentally based, and I'm diversified. So if I'm wrong on one, then I'm normally right on the other, to a certain extent. So, but on a fundamental level, I think gold goes higher. I still think there's lots of buying out there, and I still think there's as interest rates come lower, there's no real benefit of holding low interest rate stocks. So where gold is a sort of dividend paying asset, then it's benefiting from the safe haven demand, what's about to come out now, safe haven demand and central bank buying and so forth, and it's a commodity you can actually hold. Right, we just got a couple of seconds. Let's have a quick look then at the euro dollar. Go back to here we are, and I'll give you my opinions as they come out live. My bias is for this to trade lower.
2.9%,
2.9%
as expected. Month over month,
we'll trade lower.
4%,
This will trade lower.
4% higher than forecast. 0.3%.
Yeah, this will go lower now.
Month over month.
Euro dollar goes lower.
0.3% as expected. Core year over year 3.1%, 3.1% as expected. Weakness in the S&P 500, whipsawing in the dollar coming through here. As again, CPI month over month.
Whipsaw in the dollar. I think this goes lower now.
At spot.
Selling into any of this.
Jobless claims initial 263k, higher than forecast 235k. Continued claims at once.
Not doing very much at the moment, but I would be surprised to see by the end of today,
lower than forecast
dollar coming into a bit of support.
Dollar now a whipsaw in the S&P 500. Weakness in the dollar coming through here.
Well, is it coming through here? I think he's wrong. It's not coming through at the moment. Dollar is actually trading unchanged. I think the squawks maybe not got that right. At the moment, you're seeing.
Keep in mind, we are still awaiting the super core calculations to come through. They're often a few minutes delayed.
So at the moment, you're seeing, and now you're seeing the weakness coming in at the dollar. Dollar coming in weaker with the inflation picture stronger than expected. Is that normal? Should that be happening?
Claims revised down slightly to 236k.
And the fact that the stocks are trading lower is an early sign that the dollar is going to trade stronger. For the euro dollar for the stocks to trade lower, dollar to trade stronger, the euro dollar falls. Flat for the numbers. Let's see how it plays out. it's flat, but I think the market was hoping, J Knox. I think the market was hoping for a really soft print. This is, I think, just profit taking or position sort of changing, because I think the markets were expecting that. But
the dollar now extending this drop off the back of these CPI numbers. S&P 500 holding pretty steady here.
S&P holding steady.
We have posted the August CPI report on the feed for those interested.
Okay, can someone ask, can you actually hear the squawk that comes out my box? Because it's on the same machine today as my stream software, which sometimes it means it doesn't pick it up. Can you hear the stream?
Euro turning positive against the dollar. Last up around spot 1.5%.
Wow. Move 20 pips. I'm not committed behind that. To be honest, you do need to see a break higher than 17.35 for you to consider that trade to be off.
Add to wages on at least 2 Fed rate cut bets by the end of this year. So again, traders adding to bets on at least 2 Fed rate cut bets by the end of this year.
So let's have a look here at the hour chart. The green line is the greenback. Takes a couple of seconds to work it through.
So US Supercore CPI month over month, spot 3.3%, down from spot 4.8% beforehand.
I've missed. I think the markets have taken that the wrong way. There you go. Can't fight it. We're going to do what it says. So you should never trade what you think is going to happen. What you think happens very rarely happens.
CPI unchanged, 3.21%.
Trading view is running slow.
Reflects bets on 4 straight quarter point Fed rate cut bets through to January.
Wow. That's quite surprising. Now pricing in 4 cuts now through to January. 4 straight cuts through to January. Fed Powell looking to keep his job. Is that what it's all about? Right, I'll have a look at the answers to our trivia. And so we'll close the trivia quiz now and have a look at the answers. What is the marginal lending facility? So basically there are 3 rates that the ECB monitor and put out. The main rate that the markets look for is the not the deposit rate. It's basically the main refinancing operations rate. That's the main rate. It's basically 2.15% at the moment, but the marginal rate is slightly different. The marginal rate.
So keep in mind now, in 10 minutes' time, at 8:45 a.m. Eastern Time, we'll get the ECB press conference. I
don't think many really look at the marginal rate. It's basically like an emergency rate that banks have to use if they get low on liquidity, or like the overnight rate. No one really looks at it. But the marginal rate is unchanged this week, and the answer to the marginal rate unchanged at 2.4%. So that's the answer to question 1. How many rate cuts have we seen since the peak, which happened to be in June 2024? Jay Knox, no one else is answering me. I've asked it 3 times now. Can you actually hear the squawk as it's coming out of my box? Maybe I'm talking to myself. How many rate cuts? We've seen 8 rate cuts since the peak. Total of 2%. Okay. Nelson just shoves up 2.4 into the chat. Question 2: how many rate cuts? We've seen 8 rate cuts since the ECB started. So if the Fed cut interest rates, what's that? That's bearish for the dollar. If the ECB raises interest rates, that's bullish for the ECB. Which direction should the euro go in? Well, it was bullish for the euro and bearish for the dollar. The euro dollar, because whatever happens in a currency pair happens to the first currency in the quote. First currency in the quote is the euro. So the euro goes up, dollar goes down, the euro dollar goes up. So there are the correct answers. There are the correct answers in that competition. So let's have a look now myself to see who has got the answers. My team and now are furiously working behind the scenes to come up with the random winner of the answers. How many have got the answers correct? We've got a lot of entries. Not many people contributing in the chat, but a lot of entries. Let's have a look. Yeah, we've got a lot of good answers in here. Some people have just copied the answer in from ChatGPT without actually giving the actual rate. But that's all right. I don't care how you get the answers, as long as you get the answers correct. But just giving the definition from chat isn't going to work. Unfortunately, I don't think you're going to be selected in there. I'm just seeing how many correct answers we've got. We've got 1, 2, 1, 2. Got about 9 correct answers I see, but obviously the team will work behind that. Okay. Right. Okay. Well, that's where we are. I'll get the answers. I'll get the random winner in a moment. So we're just waiting for that to come through. We've had confirmed. We've had 8 successful correct answers. So here is the dollar coming in. The green line is the dollar. That is the greenback. Dollar is trading lower. Euro trading higher. It must be coming back down now, is it? Watch this. This will trade lower this afternoon. If you're trading that, then you're gambling. Pound dollar. Dollar weakening up. Not sustainable in my eyes. If you get an ECB dovish press conference starting in 5 minutes' time, you're going to see the euro dollar trade lower. So I think that's more likely. All right, okay, I've got my answer coming through on the WhatsApp. Let's have a look. Okay, I've got my answer. I've got my randomly picked answer. I just put it into the streaming software here now, so you can see it. Is that the only information we have? Back to office team. Is that the only information we have? Of the winner. Okay, right. I'm just putting it into the stream here now. So all the there we go. I presume I've given me your email, so I presume that's your second name. So I'll just put it here in the chat. I'm not going to put the email on the chat, otherwise you're going to get bombarded with lots of spam by people. But there you are. Okay, so the winner of the ECB trivia today is going to be ChatGPT to the rescue. Yeah, absolutely. The winner today, congratulations, goes to, there we go. I presume that's the second name. Got your email. Ray Dalio. You know, you put your name down just as Ray. Didn't put your second name down. So, but you put your email down. So that's where I got that from. But that was randomly selected with 3 correct answers. And there was, as I say, 8 total correct answers as well. A lot of people, by the looks of things, just put in the cut and paste from chat, which was what the main marginal rate, what the definition is, didn't actually put in the actual number, which is 2.4%. So those that just use the chat, unfortunately, didn't cut it to the winning line. But that's all right. So gold, and we'll have a look at gold, and we'll have a look at stocks. Gold's going the same way as the euro dollar. Euro dollar and gold now obviously quite well correlated. It's really a dollar cross, trading higher. Haven't broken the boomerang support there. But it stops really for this trend to be over, or boomerang reversal to be over, would be up there at 3659. By the way, if anyone wants to know more about the strategies that I talk about all the time, I know I mention this every week. No one seems to use it, but it's there if you want to use it. We've got this education suite with all my strategies that I teach, adding more content each and every day is what I'm doing behind the scenes. If you want to add all this into your armory of trading, all the different psychology courses, resources, strategies that we talk about, and so forth, all you need to do is use the code PropIQ on the checkout, which is basically that code there, and you get access to all that. You also get a chance of a one-on-one with me, which Peter did, and we didn't end up tying up our schedules, but hopefully we'll get that in the calendar later this week or early next week. Peter, just send a new date in. So there you have it. Okay, folks, let's have a quick end up by looking at the stocks, and then we'll call it a day. S&P 500, all-time highs. Trend is up. Trend is up, and of course, if rates come lower, what's going to happen to stocks? Well, stocks will remain bid. I would have thought. This pullback here pulls back. This is not a classic boomerang, but it pulls back to basically the high, almost to the pip. That high there is almost to the pip of that high there. I'm not saying. I mean, this is not a boomerang in its pure sense of the word, but indeed that's exactly where the pullback had. Well, you obviously had liquidity orders in there, which was the level where a couple of times now we've broken through that. This pin bar showed you on the hourly chart that there's liquidity in here. Got it in there again, exactly where that pin bar's main body was, showed us higher. It's just pure sort of price action, but I think with rates going lower now, 4 cuts, there's no real reason why you want to start selling the stocks. I would have thought 30 unchanged on the day. Okay, folks. Well, I appreciate you tuning in. Appreciate you tuning in. Ray Dalio, send me an email to education@Funded Trading Plus, and we'll get you tied up with that account, $12,500, which you can use straight away today. And I suggest you take it seriously as if it was a $100,000 account and trade it up, scale it up if you haven't got an account with us already, and then soon, hopefully, if you've got strategy and you've got discipline, you'll be trading on a decent size account. But this is a good head start for you. And anyone's interested in starting off with the props, you can do. I think we're still running a discount on the main accounts, which you can check out at the. So I just want to make sure we're still running that. We were this morning when I checked. This, yeah, okay. So you can head over to the site, and you've got the Experienced Trader program. Actually, you get well, there's 2 things going on here. You've got the 25% sort of uptick on the account sizes, so 25% more on the simulated accounts. So it's an account boost. That's the word I was looking for. 25% account boost. So a $100,000 account becomes a $125,000 account. 50 grand account becomes a $62,500 account, and you can also get 10% off the Prestige Lite as well. 10% off that using the code LIGHT10. The email doesn't come from me. It won't come from me, but if you type in Peter, if you do, I'll send you an email in a moment, Peter. Okay, folks, I'll leave that there. Thanks for tuning in. And we'll see you on Monday for the week ahead live stream, which goes out at the same time. My guess is 3625, trading now at 3629. I don't know. Oh, God, I might even win my own competition. Okay, folks, thanks for tuning in. See you soon.